This week is huge because we've got no fewer than 5 major central banks making their interest rate call, and none of them come bigger than the Federal Reserve Bank. And in all honesty, the market is fully priced in, no rate change whatsoever. It is very, very likely to be Jerome Powell's last meeting as chairman and the last time that he hosts a press conference. Inflation's still remaining sticky and the jobs market's still resilient in the US. Obviously, there's a slight skew, there's a big skewing now to whether we see a more hawkish tone from the Federal Open Markets Committee, and if we do see that, how much more is it than the market's pricing in? Hello and welcome to ATFX's FOMC preview. What a week we have got coming up in financial markets. Obviously, we've seen massive volatility across all financial products over the last few weeks due to the war that we've seen in the Middle East and markets' reaction to that. Now, this week is huge because we get not one, not two, not three, not 5 major central banks giving their interest rate decisions. And of course, the big one is out middle of the week, the Federal Reserve Bank FOMC decision coming towards the end of that New York trading session. And in all honesty, the market is fully priced in, no rate change whatsoever. But what we are expecting is massive volatility on the forward guidance that we get from the Fed. And of course, there's an extra twist in this one as well, because it is very, very likely to be Jerome Powell's last meeting as chairman and the last time that he hosts a press conference. We know that President Trump's favoured nominee, Kelvin Walsh, is likely to be taking the reins for the next meeting. And it could be the difference that we see between these two meetings that could really see some massive changes in markets. So let's have a look at what we're expecting. As I said, no change expected whatsoever, mainly due to what we've been seeing in data and what we've been seeing in geopolitical risks. So inflation's still remaining sticky and the jobs market's still resilient in the US. On top of that, of course, we've had the energy price surge that we've seen from the Middle East, from oil mainly, but across the whole scope of things. That's increased inflationary concerns. And that's where we're going to see a real focus in the statement and from what we hear from Jerome Powell. And that's where we're likely to see some big moves in the market. So obviously there's a slight skew, there's a big skewing now to whether we see a more hawkish tone from the Federal Open Markets Committee. And if we do see that, how much more is it than the market's pricing in? Now, don't forget, we were looking at 1, probably 2 rate cuts by the end of 2026. Now those expectations have really pulled back, with some desks calling that we won't see any moves at all, and even some going further, that the next move could actually be a hike. Now, we don't know that. We're going to be data dependent over the next few months. But what we will get is some indication of what the Fed are thinking in the next couple of days, and that could see some massive moves. If it is more hawkish than what we're thinking, we could see yields increase, the dollar increase, and some big moves across products. Conversely, of course, if they're still remaining and calling for another cut this year, even 2 cuts from some of them, then that could see the dollar really retreat fast, yields pulled back, and equities look to rise to the top side. What we're going to look at today, we're going to look at dollar yen, we're going to look at euro, we're going to look at gold. Gold's a very interesting one at the moment because it has been moving very much in line with the dollar recently, despite the huge geopolitical risks that we've seen in the Middle East. So bear with me a second. I'll bring up our dollar yen chart and we'll look where there could be some excellent trading opportunities. And here's our daily dollar yen chart. Most of you will be familiar with this if you've been checking into our recent updates. We are at the top. We're not too far off annual highs. Annual highs hit here just above 160. We're trading in a pretty sharp, volatile range, and that's been on the back of geopolitical updates, and that's been on the back of dollar moves and what we've seen in the yen. Obviously, Japan, a big oil importer, heavily affected by what's going on in the Middle East and what could result of what's going on in the Middle East. One key fact with dollar yen is we've got the Bank of Japan out today, so we're going to get the input from one side of the equation first. They're also expected to be in a wait and see pattern, but excellent trading opportunities because we are near some key technical levels. So if we come in a lot more hawkish, you can probably tell I'm kind of leaning to that side of things. Won't be popular with the White House, but it's probably the way the markets are going to be looking at it, and the Fed. A breakthrough of this resistance levels, they're coming in now. Trendline resistance coming in just beneath 160. A breakthrough here sees a quick check, and it's not too far higher, 160.36. it could open the way for big moves for the top side there. That would be a big move, wouldn't be popular with the Bank of Japan, but that could be the way the markets are seeing. Clearly, it's following the trend that we've seen from earlier this year. We've moved all the way down from what these levels, around about 152, up above 160. That could be the big, and it could be a very painful trade. Contrary to that, of course, we could see a slightly more dovish indications and a much more wait and see approach from the Fed. That should see some dollar selling. That will take us down. Initial support now coming in around about 158.50, and then we'd be targeting this low here about 157.57. A break through these levels opens the way for a bigger move down there. That would have to be very dovish in my opinion. So plenty of trading opportunities in dollar yen. I'm going to take us over to the euro chart now, also setting up nicely for a decent trading opportunity. Okay, here's the daily euro chart, and you know, we've seen a similar kind of pattern. Choppy trading in the last few weeks, unsurprisingly, on the back of those dollar moves that we've seen from geopolitical risks out in the Middle East, out of the war with Iran and the US, and what's continuing to go on. We will see those during this week, despite the big fundamentals that we get from the central banks. But we're sitting on a nice trendline support level here at the moment. It may go before. We've only got a couple of sessions ahead, but that will once again come with the hawkish tone. So dollar buying, euro selling. A breakdown through these levels, and if you see here, we've based a couple of times on that 200-day moving average. That comes in at 116.75 at the moment. A firm breakdown through this trend line, so one technical level, 200-day moving average, another technical level. This double lows that we've got down here around 116.70, a breakthrough there could really exacerbate this move, and we could see a relatively quick move down to this longer-term support just above 115, the figure. So there's that hawkish side of the trade that could occur. Dovish side, and we see dollar selling coming through the market. Resistance now coming around 118.23, previous high 118 for another break here, as I'm saying, and this would be on a very dovish call. As I said, that opens up a move very swiftly, probably up through 119. We've got this cluster of highs around 119.30. That's probably the next target. And then we're looking all the way back here to the annual highs up at just underneath 121, the figure. So good trading opportunities in euro as well. A lot of these majors are building up for some good trading opportunities, especially when they're sitting near the extremities of recent moves. Now we're going to go and have a look at gold. And as I said, this could be really interesting. We could see gold move out of the range that it's been stuck in for a fair while at the moment. So bear with me. I'll move over to that daily chart. And here we go. Here's the daily chart, which you will be very familiar with if you've been tuning in. Like we've been looking at gold so much. Massive move up, as we know, from that huge break back in September. Massive percentages. This year, we've seen huge moves as well, all the way up to that high up just under that $5,600 mark. We're now down at 46.80. But if you look, and I'll bring this in, we've been fairly range bound since pretty much the start of April. And it's been trading hard. This is volatile moves. This is a daily chart, so we're not seeing those intraday moves, but it has been trading hard in that. And now recently it's been really contracting. So gold has been dealing on the dollar side of the trade. It's been a strange phenomenon for most of us in the market that the haven trade has not really come through from gold for this whole conflict in the Middle East. It's really been dollar dominated. So normally we would expect when geopolitical risks increase, you buy gold more so than you buy the dollar, and gold would have exploded higher. We have not seen that. So this makes it a fairly unique Fed that we've got coming up, that we can trade that dollar side of the equation. So once again, if it comes in hawkish, expect gold to sink. And what we could see is a firm break of these recent, like there's that trend line support. It's not a great level. A low down here, 46.40. We've got a couple of lows down here. A breakthrough here could take us down to this 200-day moving average, which is creeping up, it has to be said. And it's taken a while, down around 42.50. Massive, massive moves. Conversely, of course, more dovish. We're probably going to take out this resistance trend line. We'll look to attack those highs around about 48.90, and then the move could be back up to here. So massive potential in gold as well. And as I said, it's one of the few Fed meetings where we have had gold really moving on the back of US yields and the dollar. And so therefore, we can really look to probably put a bit more of your capital in those trades, especially if we get something a little out of the ordinary from the Fed. So they come out late in the session on Wednesday, and we're expecting them to hold rates, but we are expecting huge volatility on the back of the forward guidance that we get from Jerome Powell and his team in Jerome Powell's final meeting as a Fed chair. So could be massive moves that we see on the back of it. The market's leaning towards a bit of a hawkish skew. We could see dollar fly higher. If they don't bring that out, the dollar could crash. Massive moves anticipated. Click on the link below and have a look at our full analysis. We're going to look how there's opportunities in gold, in dollar yen, and in euro. Big week ahead for traders. Thanks for tuning in. Click on that link. Thank you.